Good afternoon, everyone. It's a small audience, but hopefully a very excitable one. My name's Michael Hanlon. I'm the CEO of Playa3ull Games, and I want to start today's discussion with something that might sound a bit counterintuitive, and that is that crypto has a retention problem. So we're brilliant at attracting capital, terrible at keeping attention. We've created thousands of tradable assets, but very few reasons for people to stick around after they buy them. So today I want to talk about why that's changing, what's driving it, and most importantly, what you can do about it, whether you're trading, investing, or building. So the retention crisis, what do I mean by that? Well, the average crypto holder checks their portfolios 3 to 4 times per day. Sometimes it's 30 to 40 actually, but any actual time using crypto products themselves, about 12 minutes per week. So compare that to gaming. Mobile gamers spend 7 hours per week in game on average, and console and PC gamers double that. So here's the insight. We've been optimizing for transactions as an industry when we should optimize for time spent, because time spent is where real value gets created. It's where communities form, habits build, and cultural gravity happens. So what's the takeaway? Well, if you're not evaluating crypto projects, if you're evaluating crypto projects, start asking how much time do users actually spend here? Not Twitter followers, we know how much they can be twisted. Active time, that's the leading indicator of sustainable value as we see it. So I want to talk a little bit about the 3 eras of crypto and where we think we're at right now. Era 1, speculation. What's this worth? Where trading was the primary activity. Era 2, starting circa 2020. What can this do? DeFi, NFTs, infrastructure. And Era 3, where we see ourselves being at now, what does this mean? Success measured in engagement, identity, and retention. So gaming is the most obvious vector and sector for Era 3. Games have been building culture for 50 years. They just haven't had any ownership rails as such since now that we have blockchain. So what do games solve the retention problem? Games have what pure financial products don't. They have daily rituals, something to do, not just to check. They have progression systems, always a next goal, a next level, something to try and achieve. Social fabric within games, relationships that keep people coming back, the people you meet online, the people you play games with. So the narrative arc is that there are reasons to return. And when you add crypto, those rituals and achievements become owned by the player. They're not licensed. You don't have the ability to access them when the owner decides you should. You own them yourselves because they're on the blockchain. So what's the actionable takeaway from that? Traders, you should watch on-chain activity metrics. The daily active wallets, the transaction frequency. These are a much better long-term price predictor than any chart because they go to engagement and long-term interest. Investors, you should look for active communities, thriving Discord servers where there's a lot of activity, regular tournaments, in-game events, those sorts of indicators. And builders, you should design for daily habits, not monthly check-ins. So how does that work in practice? Well, we've been doing it for the last 3 years, so I think we've got some perspective on how it works. We run multiple games. On the Epic Game Store, you can right now download our Nexus Ornament, and we have 3 other games very close to release. Our first on mobile being Starved Marshal, War of Steel, and our Epic Dogs of War. Everything that we produce runs on our bull coin or our bull token, spelt with a 3. And here's what we've learned. Earning needs to be tied to skill and effort. So in Nexus, for example, players earn bull by playing well, with a play and earn pass, not by staking, by actually playing. Spending has immediate utility. With those earnings, you can buy skins, card packs, tournament entries, that type of thing. So what you create is a loop, an ecosystem, whereby everyone stays within it. Real ownership means something. Players own their assets. They progress and have economic participation. At Playa3ull, we will have 50,000 nodes that secure the network. And our long-term play is that once our token has finished its submission, which is in 2033, those node holders, the rewards don't stop. For us, we see these node holders as a part of our ecosystem, therefore they share in 50% of the net profits. So that's infrastructure ownership, not just token exposure, which is what you normally get in the crypto game. So when you're evaluating any gaming project, if you're interested, where does most of the activity happen? Is it in-game or in exchanges? Because we believe that healthy economies live inside the world and not just on price charts. So ask yourself these questions. Can I earn by playing or only by buying? Can I spend on things I want in-game? Where does the most activity happen? And are users operators? Are they running nodes, providing value, or are they just token holders? Here's what we've observed and how we see most projects run. The pattern for us that we've seen is phase 1. Launch, a lot of hype, prices go up, and a community forms basically around the price, not necessarily the product, not necessarily the games, not necessarily the opportunity. It's pretty much just speculation. Phase 2, inevitably, the price stabilises, the speculators exit. They're on to the next best big thing. They've moved on. So, your project either ends up in one or two places. Most, it's a ghost town. Everyone's gone. There's no reason to stay. They were only ever there for the price action at the start. Gaming projects, good gaming projects that see the future, they'll maintain core players. There's something to do, there's a reason to be there, the economy stabilises, and then we get to the next stage where we start to form some culture. So what's the difference? It's shared purpose beyond profit. Players competing in tournaments, building in games, trading up items, forming clans, relationships, friendships, and that creates social debt. You come back because your friends are there. So look for projects with nested communities. trading layers, building layers, and core user layers. If you've got all three, you'll have resilience and you'll have a long-term future. So why do we think that gaming is crypto's next phase? Well, games require infrastructure. Marketplaces, identity, reputation, anti-cheat all need to be decentralised for ownership to work properly. Games generate continuous demand. Every match, trade, tournament, there are transactions. Not just a one-time mint of a token. There's a continuous demand. Games also attract non-crypto users. To be honest, most gamers don't care about the blockchain. They care about fun. But they're using crypto without knowing it. That's really the goal. Utility that's so seamless that it's invisible. So what does that mean to you? Well, if you're a trader, infrastructure plays capture value across all games, not just one. For investors, it's about prioritising platforms, not single games, diversify risk and shared infrastructure. And if you're a builder, well, think infrastructure from day one. So, in terms of a tactical playbook, how do you apply this in your own assessment and analysis? If you see yourself as a trader, track monthly average users and transaction frequency. Watch for competitive seasons and tournaments. Monitor where activity happens, in-game versus exchange. Set alerts for attention milestones. They're all the indicators you should be looking for. If you're an investor, it's about multiple revenue streams, not just token sales. So look for other ways that the games are achieving revenue. Active, engaged communities. I think this is probably the most important factor. If you have active, engaged communities, representative in Discord or in-game activity, you know that you have a long-term future. Because if any of you are gamers or no gamers, you know how committed they are. Once they're in, and they can stay for years. No infrastructure ownership models. They're really helpful in the long-term play. And genuine partnerships. Not people who say they're going to release games and tell you how great those games are going to be, but people who actually have them published or playing esports or other ways that you can identify that they're real. So for us, having 2 games already on the Epic Games Store, we're already streets ahead of most in this space. What about for builders? We should be designing for daily habits, making sure that whatever you are producing creates habitual behaviour. Earning should be about skill and time. We want people to commit their time and their skills rather than just their capital. Early community governance. It's really important that your community has the right management, because it can go awry pretty quickly. So you need to make sure it's a nice place to be and it's enjoyable. And don't launch a token until you find a product market fit. So what's our approach look like? How have we gone about this? And how do we align with what we see as the important factors? Well, for example, we're currently running a promotion called November, a node sale designed for this exact application. What do you get? You get to run a node in our gaming network. Currently, You get rewards of just over 1,000 of our bull token per day. 50% of our daily token issuance goes to the company, 50% goes to the node holders as a reward for providing our infrastructure. We have weekly prize draws. Up to 200,000 bull can be won in a draw, and you can win more than one of those draws. We have 5% referral income for all our node holders if they introduce other node holders. And from 2033, when our coin stops emitting and we have minted all of our coins, 50% of our net profits will be distributed amongst the node holders. So they're genuinely part of our infrastructure. We also have fractional nodes available for lower entry proportional rewards. So why this model? Why did we go down this path? Well, it's all about alignment for us. If our games thrive, your nodes thrive, and you're providing the infrastructure for those games to run globally. You're not speculating on a roadmap, you're actually operating our infrastructure. And if our approach is right, if gaming is where crypto's retention problems get solved, then being an operator within that infrastructure is a very different position to just being a token holder, where you're just subject to speculation, whether that's up or down. So what's the challenge? Well, here's what I'd ask of everyone. Stop evaluating projects like stocks and start evaluating them like a country. Ask yourself the question, would you want to spend time there? Are the rules fair? Is there an opportunity to build in this country? Do you trust the people running this country? Is it a culture you'd want to be a part of? The projects that will win in the third era won't have the best charts. They'll be the places people actually want to be and want to be a part of. So in crypto, we've spent 15 years building what is essentially financial infrastructure. Now we're building social infrastructure, cultural infrastructure, identity infrastructure. And for us, games are the testing ground for that. So in closing, if you're curious about nodes, please go to our website, playable.games, that's with a 3. Or have a chat to me after this, got some time. And if you're building and gaming, let's talk. I'm happy to share lessons about our experiences. If you're watching this space, pay close attention to retention, active engagement, and time spent. They're the signals that you're onto something. Crypto doesn't need any more traders. It needs more citizens. It needs people who stick around. And we believe that gaming is how we build that. Thanks for your time. Any questions? I'm happy to answer them. We've got about 6 minutes.
Woo!